All right, good morning, gang. Welcome back to the live trading room. How's everyone doing today? Happy Wednesday to you. One of these days, months, years, I'll finally get the day going, or the correct day. I'm doing good. A little tired. One of those kids up all night type of days, but it is what it is. It's funny. I saw something this morning. I haven't seen this in a while. Maybe I haven't been paying attention to you remember those old posts where it's like, people were basically telling you had to wake up like 4 o'clock in the morning if you want to be a success. Like if you're not waking up 4 o'clock in the morning, you're a loser, which is completely untrue. But I saw one of those posts this morning where it was like, if you're not up at 4:30, you're slacking. While other people are sleeping, you're making money. And I was like, man, if I would have waken up, well, I was up 4:30 this morning, but I certainly wasn't making money. I was up trying to get kids back to bed. And man, I tried the whole no sleep thing before, and trust me, it always ends horribly. So if you're new out there, let me start my backup recording. Make sure you get your sleep. But let's get started here today. Not a lot to talk about news-wise. Again, I mentioned this in the weekend trading video. It's going to be a light news week. Cool Trading Coast podcast out today if you haven't listened to it already about compounding. So make sure you check that out. We're going to head over to the euro dollar for today's trade of the day. And Oliver, Pin Bar Oliver, right? Did you end up getting what you needed for it? We didn't necessarily get the pin bar. We got a nice little consolidation here with a break above. But this is something one of our live room members yesterday brought to our attention. He was tracking it, going through, I believe, on demo, but working through it like it's a real trade. So visualizing it, going through the rules, going through the if-then syntax of if this, then that, if this, then that, and treating it like a real trade. And here's my advice for anyone that is new, perhaps. Demo trading should be treated like live trading. Just because it's a demo account doesn't mean you can just do whatever you want. Does that make sense? Right? The point of demo trading is to simulate live trading. And obviously you can't simulate everything. You can simulate most things. What is the one thing that can't be simulated in demo trading? Who can tell me? The one thing that can't be simulated in demo trading. By the way, just update you guys while you're answering the question. Did get filled that pound dollar bearish bat this morning. Dollar yen did stop me out, plus 22 on trail. So it ended up being a profitable trade. But again, nowhere near the home run trade that we were looking at yesterday. So it's been, I'm 0 for 2 on dollar yen as far as like overall predictions, but I've made money on both the trades. So if you can make money on trades that don't necessarily go your way, that's a positive because they easily could have been lost. I think we're having some streaming issues over on YouTube. If we are, let me know. I don't know if there's anything I can do about it, but my apologies if we are. But yeah, the one thing that can't be simulated with demo trading is emotions, real money emotions, right? There, excuse me, there are a handful of things in life that are big emotional drivers, and money is one of them. Money is one of them. So no matter what you do, no matter how many times you tell yourself that, you try to convince yourself that it's real, there is nothing like losing or gaining real money. And the the spread too. Yeah, the spread. And I can tell you this, the more the more money you get, the harder it is. You guys know the story already, but one of my biggest emotional meltdowns came when I was managing money. And a good part of that was being spineless and afraid to tell my clients no, but also the fact that I basically went from trading like I want to say a $10,000 account, but I lost a lot of money. So it probably was like $5,000 by the time I started turning things around. I went from basically trading like a $5,000 account to managing over $250,000. So you can imagine the differences in position sizes where basically, a position size for the account that I was managing money was probably like 50% of my trading account back then. It was a big change. So the emotions hit even harder. And, add to the fact that it wasn't my money. I think it's a little bit harder to lose other people's money as well. That was one of the big reasons I had one of those emotional breakdowns. So that's why we tell everyone, when you get started in the process, treat yourself like a prop firm, right? Start demo and then start really, really small, right? Start so small that wins don't really make you happy from a monetary perspective, and losses don't make you sad, right? If you take a loss, it should be like, oh, I lost it's like you dropping a penny. Like, I lost it, like, sucks, but it doesn't really sway you one way or the other emotionally. And then as you start to practice and understand your emotions and get a better grasp for things, and become better as a trader as well, then allow yourself access to trade more capital as you're improving, right? Allow yourself to do more things as you're getting better with doing them. There's one more thing I wanted to bring up, but I forgot it. So let's hop into this trade. Let me just take a sneak peek at the pound dollar real quick, just because I want to make sure we get everything straight on there. All right. So euro dollar, you'll remember this as the muck from a while ago, right? This consolidation period right here is the muck. Then last Thursday, I believe, right? This is going to be a review for a lot of you, but this is what we do here. Last Thursday, what did we do here in the euro dollar? We know, Akil. We looked at it yesterday. We did the same analysis. I know it's boring and repetitive, but guess what? That's what's going to make you better. That's what's going to make you better, boring and repetitive, because then those small things don't slip through the cracks. Trust me. Yep. Break and close above structure, higher high, higher close. We know that going through that IPDE process, right? If we get that higher high, higher close, it allows us, if we identify, that higher high, higher close, it allows us to make the prediction that price is likely to go higher. If price is likely to go higher, we pinpoint the areas where we're looking for price to go higher to. Yesterday, we had on the radar a nice zone between 116 and 115, right? We had some Fibonacci confluence there as well. So you can see price action has pulled back, nice 3-bar reversal here, pulled back into our period of consolidation. And now we're looking for a bullish pullback trade. So we went down to our lower time frame. We identified a few zones. If you're on NinjaTrader, you're going to get a bunch of VS1 zones down here. But one of the first zones we identified was this big red box that I drew on. And then, right, we narrowed that down to this specific level. If I can get my drawing tools working, this specific level right here. And you can see as price action has come to test this previous level of structure support, we have got a little stalling action, right? We had a high momentum. Would you guys agree? High momentum bearish candle. Again, following up on Monday's Q&A as well. Big bearish candle, strong bearish candle, because the close is easily in the lower third. Yeah, I'm having connection issues as well. Are you guys, like the YouTube thing keeps getting the spinning wheel. I'm not sure if you guys are getting the same in here, but is it running fine in the live room here? All good for me, yeah. All right. Yeah, I'll keep going. So we came down to this level, and then we got a nice little stall, right? We got our high momentum bearish candle, right? Obvious bearish strength. What's our next candle? What's this next candle right here? I'll zoom in a little bit for you so you guys can see it. I'll get rid of these little zones as well, right? We got a doji candle, right? A doji candle is a sign for what? Or of what? Big difference, a sign of versus a sign for. It is a sign of indecision, right? Price pushed up, buyers pushed up, sellers pushed down, ended up closing right in the middle. After that doji candle, hold on, I'm going to need a sip of water before I do this. After that doji candle, we got another doji candle, but a little bit more specific doji candle, as this is a inside bar. A little weak this morning, a little weak. It's hard first thing in the morning. The voice hasn't woken up yet, but it's I'm trying. Tried to lube up the mouth, the throat a little bit, but we got an inside bar, right? We know an inside bar is a sign of, right, hammering you guys over the head with these lessons. Yep, consolidation. So we know it's obviously it's a doji candle as well. So indecision, consolidation, right? The range is getting smaller. Then we get a nice stronger bullish candle right here. It breaks the inside bar, doesn't violate the inside bar. But a nice strong bullish candle here, and then finally you get a higher high, higher close right here, which could have been used as a reason for entry. Now, for me, there's a reason this wasn't a reason for entry, right? And we talked about this. I'm not sure if we talked about this in a live room or if it was a private conversation. I think it was a private conversation with a trader, but I've told you guys this before, right? So my entry depends on my aggressiveness. The aggressiveness of my entry depends on the quality of the setup, right? So we talked about this level of structure, right? It is a level of structure. Would you guys qualify it as a grade A level of structure? And if so, why? If not, why? By the way, if you guys are watching on YouTube, do me a favor, hit that like button for me. Supports what we're doing here, live stream, 100% free. Over 1,000 videos, over 1,200 videos on the YouTube page, all for free. So do me a favor, hit the like button, helps a lot. Yeah, we have underlapping levels of structure, right? This is not the major level of structure, if you may, right? We can zoom out and we can see the major level of structure is going to be the bottom of this consolidative period, which is a lot lower. So it's not the ideal situation. Now, understand, and again, this will depend on what type of trader you are. Just because it's not the ideal situation doesn't mean you can't trade it. Now, there are some traders that will only trade the ideal situation. There are some traders that will take shots at minor levels of structure. To each his own, doesn't matter one way or another. For me, I qualify my my entry based on that, right? So if we are at a major level of structure, right, I am allowed to be more aggressive. For me, aggressive is the higher high, higher close entry. If I am not at a major level of structure, I need to be more conservative, right? So I need to wait for more reasons for the market to say, hey, Akil, you might be right at this level, versus the other version where I'm more aggressive because the level of structure is higher. There's not as much, quote unquote, risk. So that's the reason the higher high, higher close did not interest me